Too Many Hats podcast with your hosts with the most, Tony and Lavelle. Every morning from 8 a.m. to 9 a.m. We also have Queen Watkins with Clock Dead. Tune in with us and have a great time. Let's talk about it right here. Too Many Hats podcast. Top of the morning to you, my good people. Happy, beautiful, beautiful Friday, man. It's a beautiful day, man. It's a good day, man. It's your host with the most, Tony Mays, Lavelle Salter. What it do, my guy?
What's up, bro?
Man, I can't call it Charlie. I saw you went live yesterday without going live.
Man, y'all look crazy.
He was like, "That's my phone." Somebody then took his phone and then went live with his phone.
Man, I ain't know what that man was doing.
Well, today I know it's Freestyle Friday, but I had to throw something in there. So today I want to deal with, and this may be one of those sessions, Lavelle, where we have to take multiple days.
Yeah.
Consumer credit 101. And a lot of people are struggling in the areas of their credit, getting their credit right. And so we wanted to kind of just throw out some tips and things today. And then hopefully next week, I'm gonna try to get Tasha credit. Well, Tasha Kirby, she does credit courses and teach credit. And I'm gonna try to get our inbox her yesterday.
Talking about old cookie. Talking about cookie.
Yeah. I'm gonna try to get her on here. So when you're talking about credit, especially today, I think people are really concerned, are more concerned today about their credit than maybe the past, because you can't even you can't rent a place, you can't get insurance, or the rates are higher because they're pulling your credit.
Yeah.
So I think it's become a concern to a lot of people. And so we just kind of wanted to kind of address that today. And just kind of help people out a little bit. And when I say people, I mean me included. I'm not there yet. I'm not where I want to be. And I know, Lavelle, you gave a personal testimony probably about a week ago about this whole thing, about how you went through your little ups and downs and to get to where you are. And so,
bro, if the song say the old song of church, I've been through the storm and rain, but I made it.
and it's difficult because if you don't have, this is what I learned about credit. If you don't have self-discipline, boy, you will run it
in the
up.
ground.
You will run it in the ground. It don't take long to do it.
I think what happened with me getting more serious about my business really helped my credit.
Okay.
I think a lot of people when they think about credit, they only think about it in a personal space. But
Right.
when I understood that some of the stuff that I purchased for my business, I can't rightly pay for those products out of my personal space and my business space because sometimes they get intertwined, and when you need
Well,
certain products and stuff like that.
exactly. So what happens is a lot of times, even when you have a business and you try to apply for business credit, sometimes if you haven't established yourself in business, you have to be the personal. You have to
Right.
use your personal credit to kind of vouch for your business.
Correct. So yeah,
And
that's
so
basically what I'm
until you
saying.
get your business credit, up to where it needs to be.
Mm-hmm.
And credit worthiness is a real thing. So let's kind of jump on in here, man. And I want y'all to understand something. A credit score and a FICO score is two
Two different
different
things.
things. So
Yeah.
let me start off by saying that a credit score and a FICO score is two different things.
Yep.
A credit score is a general term for any number that predicts your credit risk, while a FICO score is a specific brand of credit score created by the Fair Isaac Corporation. All FICO scores are credit scores, but not all credit scores are FICO scores.
Mm-hmm.
Many lenders, particularly for mortgages, rely heavily on FICO scores, though other credit scores models like Vantage Score also exist. And so you'll either see FICO score or most like nowadays you'll see Vantage Score for your credit score.
Mm-hmm.
And so the definition of credit score, it's a 3-digit number calculated from the data on your credit report that indicates your credit worthiness. The purpose of it is to help lenders predict your likelihood of repaying a loan. Credit scoring models like FICO and Vantage Score apply algorithms to credit report data from bureaus like Experian, TransUnion, and Equifax to create scores. Those are the three major bureaus.
Mm-hmm.
And let me tell you this, y'all. If you are a person that relies heavily on Credit Karma for your score,
Mm-hmm.
don't do it
Mm-hmm.
because they're not accurate at all.
Mm-hmm. Yep. If you have depending on the credit cards that you currently have, majority of the time, whenever you get a credit card, they're gonna have, depending on the credit card, some of them are gonna have Vantage, some of them are gonna have FICO. But you get a free report from your credit score with majority of your credit cards. So when you log into to pay your credit card bill, there should be an opportunity for you to look at your credit. I may look at mine
And
on
also
single.
you can get an annual report, a free annual credit
Right.
report.com. You
Yeah.
can get one annually that way.
Mm-hmm. Mm-hmm.
This is what I recommend. Just while we're talking about those three bureaus, all of them you can go on there and establish a free account.
Mm-hmm.
Go on there, set up your free account, and with the free account on all three of them, really, you can at least see, depending on which one they display, your credit report or your FICO score, your credit or your FICO score, and it'll tell you it's a FICO score,
Right.
or it'll say Vantage score. But either one of those reports, and then I know with all of them too, you can go on there and get like pay a premium, maybe $20 a month, $19 or $24 a month, and get like
Yep.
all three bureau scores
Mm-hmm.
where you
Yep.
can see all three of them under one location. But I've done that, and then I go back and check because I got all three of them, and then the scores may be different on each site versus that combined triples report. So
Yep.
just keep that in mind too. So again, a lot of people struggle with this, and we wanted to try to help people this morning. And like I said, this may be more than one day thing because it's a lot of information, and I want you guys to be able to digest it and be able to use it and apply it to whatever your situation is. Because once you understand what it is and then you get your report, then if you're trying to fix your credit, there are some things you have to do to dispute those things, and so forth. And of
Yeah.
course, that's I know Tasha does a lot of that, and that's one of the reasons why I wanted to kind of bring her on, because I know she helps a lot of people try to fix their credit. And there's something that you can do with GPT, where you can go in there and get a copy of your report and scan it, just do out the and it'll create these letters for you to send for disputes to the credit bureaus.
Let me also say this. When I made that testimony a couple of weeks back, I got a lot of inboxes, folks in the comments saying, "Who did that for you? Who helped you fix your credit?" Did nobody help me do nothing. I paid my bills on time, first of all, and I never paid the minimum on any of my bills. A lot of folks go to these folks who say they fix credit, and for the most part, you got some people that can help you and give you some wisdom along the way. But mainly, what critic is, our critic
You,
word is
you
just
got to do the work
being
yourself. You got to do a lot of work yourself.
yeah, it's called being a good paymaster.
Yeah.
You like, and I had to literally learn this. And Don to tell you, I'm so gun ho on making sure that the majority of the time, whenever all my credit card bills, even to my truck note, all of my stuff is paid up probably 2-3 months ahead of time. Just in the event of that I ever need to, leverage off on something and maybe need to pay a minimum, but I never pay a minimum. No, I never paid up my minimum truck note. I never paid my minimum on my credit cards because and some people what they do, and I just learned this the other day, especially with, and this may be something on down the line, but a lot of with these credit reward points and all this stuff. A lot of time, what they do is they'll pay all their bills and stuff with their credit cards, take that money and pay off their debt on their credit card and get those rewards and stuff like that. So that's how a lot of people travel and all that stuff like that. But that's a whole other thing. So that's another thing I started doing as well.
Mm-hmm. Absolutely. Absolutely. So what I wanted to share
Good morning, y'all.
is,
Good morning, Joe and Mel. Thank you, Joe.
so let's talk about this. This is how what your credit score is made of. This is how they determine like how you start to your that 3-digit credit score or Vantage score, whatever.
Mhm.
How they come up with it. So Lavelle just talked about part of this was being a good paymaster, paying your bills on time. But it's more to it than just paying your bills on time. I'm gonna tell you that. It's more to it than that.
Mm-hmm.
You have to pay your bills. 35% of it represents your payment history. So
Right.
that's you pay your bills, right? If you pay it on time, etc. Pay it in advance, pay more than the minimum. The second part of this, Joseph said, what about the bow now, pay laters and credit score?
Some of those opportunities I finished being reported to the credit bureaus, from what I
Yeah.
understand, like a
Yes.
firm, Klarna, some of those individuals. I don't know who all going to do it, but that's just something that just actually came up within the last couple of months or so. That those opportunities will start getting reported to the credit bureaus, and it's a good item to use. I use a firm a whole lot.
Well, so let me I'm gonna share something later with y'all about that too as well.
Mhm.
30% of it represents your level of debt. Like, how much of the debt do you have? Like,
Mhm.
do you have a lot of debt?
Right.
So what can hurt you is having too much of one thing and not a balance of things.
Yep.
That if you look at the 10% represents that the type of credit.
Mhm.
When you have too much of one thing and so you got a mortgage and that's it. That might not be necessarily bad because all that you have is that mortgage and they like, well, this person live. They it's sometimes it's hard and you be like, why am I pay my mortgage on time every month, but you don't have anything else, and your credit report may still not be climbing because you don't have anything else, right? Good morning,
Right.
Pop. Good morning, Rodney. And so that type of credit makes a difference too. But you have
Mhm.
to watch the level of debt because they look at the debt to income. So how much of your credit utilization?
Yep.
For instance, you have 10 credit cards. No,
Mhm.
let's not be that extreme. You have 5
Yeah.
credit cards, and each one of your 5 credit cards have a minimum of $2,000 credit limit.
Mhm.
That's $10,000. 2
Mhm.
times 5, $10,000. That's what your credit is. If all those credit cards are maxed out, your credit utilization is gonna be 100%.
Done.
Your credit utilization is gonna be 100%. Your credit rating is gonna start to drop because you're using all of your utilization of your credit.
Yep. A little trick that I started doing.
Well, hold on
And
before you get in
go
there.
ahead. Go
Well,
ahead.
so the reason I said it, this is important because credit card companies, when you're applying for cards or stuff like that, sometimes they'll ask you, how much do you generally spend monthly with your card, right?
Right.
And then they'll give you these astronomical, sometimes, depending, they'll give you these large credit lines because
Mhm.
they want you to use them. But when you use them all up, now your credit utilization is at a all-time high.
Mhm.
See what I'm saying? So
Right.
what you do is, if you have 5, just take maybe one of those cards to use as your primary card. I'm gonna use, pay it off, use, pay it off, use, pay it off. And those other ones is gonna show that you have that open line of credit worth, credit uses utilization still open.
Mhm.
So the payment history represents 35% of your credit score. The level of debt, and that's why I'm talking about this, the level of debt represents 30%. If you add those two together, that's 65% of your credit score. Just those two
Pretty much
things.
all of it.
You see what I'm saying? Those
Mhm.
two things are big. Just paying on time and having the utilization of your credit, the
Yep.
level of debt that you have. And
So
have
what I was about to say on the credit utilization thing, one of the things that I kind of started doing, I don't even know where I got it from. I just started doing it. Majority of the time, whenever I get ready to make a purchase, especially if I'm going to make a big purchase, like especially around Christmas time. So, like I like to use Macy's sometimes. So what I do is, if I know I'm going to make anything over $500, let's say, just using that number hypothetically, what I do is I go and you can go on your credit card thing and you can apply for more credit. So so if you're gonna spend that $500, you ask for $1,000 more. So that's gonna offset what you finna get ready to purchase, like you didn't even get anything.
yeah. And everybody may not be in a position to do that. You know what
That's
I'm
true.
saying? If
That's
you're
true.
in a position to do that, you know, that's why American Express actually has a card where you pay and you got to pay the full balance at the end of the month.
Yeah.
You pay it, you got to pay the full balance at the end of the month. My American Express is not like that. But I do know some people that have those like that.
Mm-hmm.
I can pay on my monthly, but a lot of times what I do is I use that card all the time, and then I pay big lump sums on it,
Yep.
to get it back down.
Mm-hmm.
So, um, so that's why and so the age of credit, like how long have you had this stuff?
Mm-hmm.
So if you just applied for 5 credit cards and they all new, and that gonna ding you. That's gonna hit you for about 15% of your credit score.
Yep.
If it's aged, you've had them a while, that looks good. And that you've been paying them on time and that you're not using all of your credit resources up.
And one of the kind of that depending on the credit card carrier that you have, depending on I know credit they get on my nerve. Anyway, uh what's the Capital One? They it's like a hitting thing. They actually penalize you as far as giving you more credit if you don't use their credit card, if that makes any sense. They like, because I stayed at the same limit of credit for I don't know how long, and I'm like, I'm paying my bill, I'm using it, but they like, you're not using it correctly. It's like it's a I'm watching that for me. I'm watching that for you. You need
So,
to watch
so
it for me.
let me ask you this, because that's not necessarily true. Because I have a Capital One too, and
Mhm.
all you got to do is like after you've had a period of time and you have used it. Let's say you might not be using it and using. You got a $2,500 limit you use and blowing it up, but you can also go in there and request a credit line increase.
I know, and they kept denying me. They kept
That
like
wasn't my issue.
yeah, they kept denying me. They just recently gave me an increase, but I made a phone call. I was like, hey, bro, I not only do I use y'all credit card, I also use y'all banking. So like, you understand what I'm doing with my money. You understand what I'm saying? So
Right.
I had a phone call with them and just kind of to get a better understanding of how they system work.
Right.
He was like, start using the card a little bit more just here and there, and we're gonna hit you up. Basically, what he was saying. So
If you ain't never using it at all, they're gonna be like, well, why are we getting you an increase? Because you ain't really using it.
yeah, but I mean, I was, but they was not only using it, but how you're purchasing and what you're purchasing, the level of stuff that you're purchasing with. I mean, purchase you're buying. You know what I'm saying? Like I was using it, but I wasn't buying no high dollar type stuff with it. They want you to. It's almost like they
I
want.
don't either. But I was spending on it, and then I was paying it, spending on it, paying it, spending on it, paying it, and they said, well, he using it.
Mm-hmm.
You know, especially I would tell you this, you can do this too though. If you go in there and run it up, and then go in there and say, hey, I'm trying to make a bigger purchase, give me a credit, they'll give you an increase sometimes based on that, because they'll look at it and say, oh,
Right.
he's trying to do something else, and and they'll bump you up. But anyway,
Yeah.
so but that's the age of the credit is 15%. So if you take the 35, 30, 15, that's 80% of your credit score. Just those three things alone. We ain't even we have talked about the types of credit, whether it's a mortgage or a car, and it's good to have those different types. So if you got a car loan, a mortgage, and 2 credit cards, and you're paying everything on time, chances are, and you're not running your credit cards to the max, chances are, because as you pay that car note, it's gonna start off with what your initial amount was, and as you pay the note, it's just gonna show it's going down. So you have to do that. And then the last part of it is it only represents 10%, but it'll drop your credit score about 5 points every time you do it. And this is these hard credit inquiries.
Yeah.
So if you can, by all means, and it goes by like within a 12-month period. If the 12-month period, they look at that roll, it's kind of like a rolling 12 month. Rolling 12 month. If you have a whole lot of hard inquiries, that's why you got a lot of companies now. They'll see, check your see if you qualify for this card without no impact to your credit. A lot of companies are doing that now.
Yep.
Giving you the soft inquiries, so they just kind of looking at it's like an overall view of your thing without digging deep down into your credit. And they can look at that and tell you a lot of times, cool, based on that, you pre-approved, and then you go ahead and apply. Now, once you go ahead and apply, a lot of times that does hit you as a hard inquiry. Sometimes it just depends on the company. Sometimes they go off that pre-qual and say, oh, he looks good. Boom. Yeah, we just pre-qualified you for 4K. Send you card for 4K, whatever. And so that happens with the soft credit. They give you, and some of them you have to go ahead on and when you say they say, would you like to apply? You hit that apply, boom, hard inquiry. And just know that represents 10% of your score.
Yep.
So your credit score or FICO score, either one, this represents 35, 30, 15, 10, 10. This is how they look at it for those different areas. So y'all might want to screenshot this so you can kind of look at it or whatever. I don't know. If you're on your phone, screenshot it. And then so the definition, we talked about the definition of a credit score, the definition of a FICO score, a specific type of credit score branded and developed by the Fair Isaac Corporation. It is the industry standard. FICO scores are the most widely used credit scores used in over 90% of U.S. lending decisions. U.S. lending decisions. We talked about this other day. You travel abroad, most of the time they don't use any kind of credit score system. You just, if you got the money and you can show that you're able to pay for that item, you can get that item.
Yeah.
FICO creates various scores, including base scores, an industry-specific version for auto loans and credit cards, which may use different ranges between 250 and 900. Financial institutions use FICO scores to evaluate your credit risk when you apply for loans or credit cards. Here are key takeaways in this. Think of credit score as a general category like fruit, and the FICO score as a specific type within the category like an apple, if that makes sense. So look at the credit score like it's a general category like, okay, fruit or vegetables. But look at FICO score like apple or carrots. Well, I don't know if carrot is considered a vegetable or fruit. Sometimes you have to look at that. Anyway, y'all know what I'm talking about. So so while you might see various credit scores, your FICO scores is often the one most relevant for major financial decisions. So there's a difference between credit score and FICO score. All right. So with that being in mind, let's look at it. I know this might be pretty small.
Yeah.
But it's a and then you can screenshot this and go back and try to blow it up, look at it later. But Vantage scores, matter of fact, let me remove this because I want you to be able to see everything. Remove the banner. All right. And also, I'm gonna take the comments off the screen. I want you to guys see all this. Vantage scores versus FICO scores. Factors that make up Vantage credit score. We kind of really talk. So it's slightly different than the credit score. When you look at the Vantage score, 40%. Hold on. I gotta blow this up myself, y'all. I got to blow it up myself. Hey. Okay. So 40% makes up your payment history. So whereas credit score, 35% make up your credit history. With the Vantage, with the FICO score, rather, the FICO score, I'm sorry, the Vantage score is 40% and the FICO score is 35%.
Right.
35%. And the Vantage score is your credit score, right? And the FICO score is the Fair Isaac score. All right. So 40% is your payment history. That's why sometimes if you're paying on time, but some of those other areas you may be lacking a little bit, your credit score may be higher than your FICO score.
Correct.
Right? The age and type of credit represents 21%. The age and the type of credit represents 21%. Well, the 30% 30% represents, and on the other one, I'm gonna bounce back and forth. The 30% is the level of debt on the FICO score, right? On the Vantage score, it's age and type of credit that makes up the most. You follow me? So there's a difference. And that's why I said that sometimes when you're looking at these, the two, your credit score or Vantage score may look like it's higher. And then, so have you ever applied for something and you got the credit bureau and it shows you your credit score, Vantage score, right? It doesn't say FICO score. But we just told you that most institutions go by your FICO score as opposed to your credit score or Vantage score. So if both financial institutions go for that, and then they call you and say, well, hey, Mr. Mays, we can't approve you right now. We pull your score is a 650, and we acquire at least a 670 or higher. And then you say, no, I'm looking And then you say, well, which way? Well, we got this through TransUnion. I'm looking at my TransUnion report online, but TransUnion says Vantage score and not FICO score, which means
Right.
it's a score and it's higher. Now my credit score showing 685. They say, yeah, that's your credit score, Mr. May, not your FICO score. And so now, as a consumer, you like, what's the difference?
Mm-hmm.
My score. No, it's a difference. It's how they evaluate each area. They evaluate each area different. That's why I put these up, the Vantage scores versus the FICO score, so you can see why your Vantage or credit score may be higher than your FICO score.
Mm-hmm.
And let me tell y'all something. I ain't been knowing this. I learned this too.
Mm-hmm.
And it makes a difference. So now when you see what each one of them does and what they evaluate and look at, now you know what to work on.
Mm-hmm.
You know, you've been making some slow payments. Come on now, get them payments in on time. Because for one of them, it represents 40%. The other one, it represents 35%. So both of them still represent, the pay history represents the majority of both of these.
Mm-hmm.
Whether it's your Vantage score or your FICO score. FICO score 35%, your Vantage score 40%. So it makes up, so you need to make sure that you are actually looking at, that payment history and paying on time. Then you want to look at the age and the type of credit and how you're using your credit. Right? The percentage of credit limit used is 20% under your credit score. So if you like I said, if you got 5 credit cards, it's $2,000 a piece, which means your total credit is $10,000, and you only use $500. Well, that's probably what, about 5% of your credit usage.
Mm-hmm.
You know what I'm saying? So that's pretty good. 2.5, whatever it is, that's pretty good. They're gonna look at that and say, okay, this person, is responsible with their credit. They not out there just running up all the cards.
Right.
That was my problem. Why I had the credit cards, I'm maxing them out. And this was the thing, y'all. This is what I was doing. I would pay monthly. My credit card bills were like $60, $70, $80 a month, $120 maybe. I was paying $500 minimum on each card. But I turn right around the next month and run it back up.
Running.
So what was the purpose of me paying? It looked good because I was paying $500. He's like, you pay $500 payment, but I run it back up.
Mm-hmm.
It's self-discipline, man. You got to learn that self-discipline. And I'm telling you, when that credit is out there and you see stuff you want and you don't got the cash right then, like, I got this card, and then your thought is, I'm gonna go and get it, put on this card, and I'm gonna go and pay that card off. But then when you get paid, you be like, I need to do something else. You don't pay the card off, you just pay on it.
Mm-hmm.
You get caught. Then now that credit card maxed out. Then you start looking at the next card to do the same stuff. I'm telling you, been there, done that.
And keep in mind what happens as well. I think what trips you up as well. A lot of times if you using one particular account, for instance, like my business, I use a company for a lot of my business stuff, and whatever, the more stuff you buy, the higher your note gonna be.
Mm-hmm.
So if your minimum on that particular account is $150, that's a lot to meet in a month's time with all your other expenses. So it behooves you to try to knock that balance down so your minimum payment can be as low as possible. Whether you had to pay that $150 at one time, now that $150 equates to 2 notes. Because keep in mind, when you make those payments, when this is your minimum amount, you're only paying so much principal and a whole lot of interest.
Mm-hmm.
So don't get caught up in because you just paid it on time. The
You be
interest,
paying for that junk forever. You being paid so much money for a credit card, man, because it's revolving, and
right?
you know that interest still every month.
Yeah,
It's whatever that balance is, and you paying the minimum payment. That's why I was paying $500. I ain't gonna pay the minimum payment. But again, I was shooting myself in the foot because even though I was paying 4 times the minimum payment, I was charging it back up.
yep. Now
Now, if
one of
I
the
was paying 4 times the minimum payment and then just doing it every month without running it back up, I would have had all my bills paid off in 6 months.
yep. Now one of the new things that's recently that's been introduced into the credit world is balance transfers. Uh,
It ain't new. They've been doing that for a
it's been
long time.
doing. It's been around for a while. But the way they're doing them now and introducing them is very can impact your credit a whole lot because if you let's say for instance you got $10,000 worth of debt, all that debt gets interest on it. So when you roll that over to that balance transfer, you're gonna stop that interest for one, and what you can do is so if sometimes they will give you 18 months, 21 months, 24 months. So that means that break that down for 12 months or whatever, however long you do it, that's gonna be your monthly amount of payment that you're gonna pay on that balance transfer. So you won't have no interest on it. So that means you always can just pay on it and ain't gonna be no interest on it. So it's gonna always be the same amount as far as the minimum amount. The total minimum amount is gonna be all principal. It's not gonna be no interest on it.
Yeah.
So the more you pay on it and the better you do with it, it's gonna cause and knock that credit down. And what happens is all of the debt that had the interest on it, that stuff been paid off. So you're manipulating the credit system as if that you're paying that debt off, and you're really not.
Well, you are paying that debt off. You're just not paying the interest. You're not paying the interest that would hit you every month. That would keep you paying on that credit card for 10 years.
Right.
You be paying on. You be like, damn, I paying on this credit card. Look, you done paid off your car, and you still paying on that same credit card.
Yeah. But the key is though, because what happens is that balance transfer, it'll give you a large amount of credit. Don't use that balance transfer card and be trying to put other stuff on it with it. That's what you're gonna jack up it.
That's what you're gonna mess it up. That's the key though. But
Yeah.
again, that requires a lot of self-discipline, man.
Yeah, doc. Like I got one of them balance transfer cards. That joke like right at 20 grand. I'm like, ooh, jeez.
Yeah, no, I don't play them kind of games.
No sir.
So why we're talking about the difference between FICO scores and non-FICO credit scores, like the Vantage scores. So not all credit scores are FICO scores. We already talked about that. But all FICO scores are credit scores. For over 25 years, FICO scores have been the industry standard for determining a person's credit risk. Many lenders use FICO scores to make faster, fairer, and more accurate lending decisions. Other credit scores can be very different from FICO scores, sometimes by as much as 100 points. I've seen it. Yes. What's in the name? When it comes to FICO scores versus other credit scores, the answer is quite a lot. Many lenders use FICO scores to make decisions about credit approvals, terms, and interest rate. Chances are when you apply for a mortgage, auto loan, credit card, or a new line of credit, the bank or lender is looking at your FICO score. The reason lenders know that what they are getting when they review a FICO scores are trusted to be fair and reliable measure of whether a person will pay back their loan on time. By consistently using FICO scores, lenders take on the risk and you get faster and fairer access to the credit you need and can manage. FICO scores can use unique algorithms to calculate your credit risk based on the information contained in your credit report. So when you like now, they may still use the FICO score rating to rate your credit when they're trying to give you that pre-approval, right? When they're trying to hit you with that soft inquiry. So this is where AI and a lot of this stuff has come in because they can do it so quick. You'd be like, man, they looked at it various views so quick because they're using the computer or using a certain algorithm that they put in. They say, okay, it's just like TikTok and Facebook. If you look at one thing on Facebook, one ad, You click on that one ad, look at it. Now, if you look at your timeline, every other post after every post, it's an ad about something similar.
Yeah.
Because that algorithm picked up that you're interested in oatmeal. And so every other thing is gonna be about the oatmeal product that they sell it on. So all of these algorithms, and it's the same with these credit card companies, mortgage companies, all that. When they do, well, most mortgage companies will do the soft, but then they'll say you based on what we look at the soft, we could probably help you. But then they'll say once they go through everything, what the requirements are, then they're gonna say, is it okay for us to run your credit, like do the hard pull?
Mm-hmm.
And once they talk to you guys, you feel comfortable about hey where you are, and they say, well, hey, it looks like it's pretty good on our end. Let's do a hard so we can get this ball rolling. And so that's why. So a lot of with AI, they can program the AI to use the AI and throw that algorithm in there, and that's why like you apply, and within a couple of seconds it'll come back with, hey, congratulations, you approve, or we're gonna send you that letter.
Yeah.
We'll send you that link with that letter. In a couple of days, you should receive something from us. Telling you why we couldn't approve you. Sorry, we couldn't approve you this time.
Another great thing to do as well, if you're married, and you can do it if you're not married. That's depending on your trust of the individual that you're in a relationship with and how you want to do it. But you can piggyback you all's credit with what you make your spouse or your children or whoever you want to use an authorized user.
Authorize you.
They don't necessarily have to use their credit card, but what happens is your credit becomes their credit in a certain
Yeah.
type of way. So that's kind of what helped my credit as well, because Don kind of hit that plateau before I did with the high score, which impacted my score on the back end, so to speak. So
Yeah.
all the cars that I have, she's on them, and vice versa.
Yeah. Same here. My wife is like the authorized user, so we try to build each other up like that.
Right.
So, and then being co-signer, when we're applying for the mortgages and cars, we do co-sign. Like we both go on there together, so that helps build as we make those help build both of ours. So
sometimes they can be kind of, depending on the loan that you're doing, that can and how that person credit is. You might want to be careful with it, because there's something depending on the type of loan you're doing. But
yeah,
sometimes
but that's if they have a real low credit score, because that could cause an impact to the rate that you get.
absolutely, that's what I'm saying. Yeah.
If I mean, like, if she was a 400, I'd be like, let me just get it by myself because I got a better, But
Right.
we add on because we know we both about the same, so it's just going to strengthen both of our profiles.
Right.
Yeah. Why do FICO scores matter? That is the question of the day for me.
Mhm.
But listen to what it says, man. And if this is true, what it's saying, then all these other countries that don't use any kind of credit scoring system, that's doing well, like is basically saying that. Okay, anyway, imagine a world where every lender use a completely different method to decide whether or not you give a loan. Whether or not to give you a loan. You would have no way of knowing whether you would be approved at one place or denied at another. So what if you don't use scores, period? Like this place, they just go off of whether or not you're able to pay versus because you make an income. So I think in those places, man, that's where I feel like your name matters. Because
Right.
if you can show, oh, well, I receive $3,000 a month in income, and whatever they selling with whatever they calculated, because I'm pretty sure they still calculate some type of rate in there where they're gonna get paid, because they're not gonna sell you a car overseas and not make something off of it. So I'm pretty sure that's built into whatever your monthly payment is, right? And so they build that into it and say, oh, can you pay $600 a month? Well, yeah, $600 a month for 5 years. Well, yeah, okay. Well, then you can get the ride, because we see that you get $3,000 a month income.
Right.
So, um, But imagine a world where every lender uses a completely different method to decide whether or not to give you a loan. You would have no way of knowing whether you would be approved at one place or denied at another. This was actually the case for for not that long ago. There were all kinds of different ways that lenders would make decisions about extending credit, including data about your person's address, type of employment, and gender, among other things. People were often approved or denied based on inconsistent and sometimes unfair information. In 1989, FICO scores were created as a way to help streamline the decision-making process for lenders and make the lending process more consistent and fair for people like you. So top read three, huh?
That's a key indicator that you just read, because what happens is that I had to go and do myself. A lot of times you have incorrect stuff on your credit,
hmm
like the spelling of your name, several address inconsistencies. Like they were still using my address from when I was living with my parents on my credit here about 5 years ago. I'm like, I don't even, that's how we don't use that house no more. Uh, the house that me and Don were living in. In Whitehaven, and even with my with mama address, all that stuff was on my credit, and I had to go get it off of there and just have one consistent address. So they also can hurt your credit as well.
Yep. Yep. Rodney, I just put a couple of Rodney. He said that balance transfer is a really good hack to save money on interest. Then he said some people use a HELOC as a debt tool to pay off debt too. Um, I could tell you sometimes you need to be careful about the HELOCs, depending on the kind of HELOC it is, because you can get those HELOCs because essentially what HELOC is a home equity line of credit, where they give you a line of credit based on your home, the value of your home and versus the what you owe on the home, and they're
Hmm.
HELOC, and most of the time, depending on your credit, I mean, you get a pretty fair rate. And so if you have a lot of credit card debt that you built up, say you built up 20,000 in credit card debt, you can get that and that credit and those different interest rates on those credit cards from 24, 29, 19, all them different rates, where you can get you a HELOC, and you can lock that HELOC in for, you know, something depending on the rates. You can lock it in for 10 years, 7 years, 10 years, 15 years, and pay 5 or 6% interest versus, you know, but sometimes what people do with those HELOCs though is they'll pay down their debt and then they'll buy other stuff because they still have credit left on their HELOC, and they'll buy other stuff. So now you just run it up.
Yep.
Top 3 reasons you should choose FICO scores over non-FICO credit scores. For years, there has been a lot of confusion among consumers over which credit scores matter. While there are many types of credit scores, FICO scores matter the most because the majority of lenders use the scores to decide whether to approve loan applicants and at what interest rates. So why choose FICO scores over other scores? Here are just a few reasons. One, you can be confident you're seeing a score many lenders actually use because FICO scores are the most widely used score. It is very likely the lender will check your FICO scores when you apply for credit. Two, you can make more informed financial decisions with FICO scores. You're better prepared to know when to apply for credit because you're viewing the scores used by 90% of top lenders. So that I think that's probably the best reason right there, because with the FICO score, since you know that it's widely used and probably more um, used more by a lot of more lenders, you could monitor your FICO score. So is so, and I know with if you do Experian, right? If
Hmm.
you do Experian, you get an account with Experian. Experian actually shows your FICO scores. Um, and your actual FICO scores. When you buy the plan, I think it's $24.99 a month, and you get all 3 scores. They show you all 3 FICO scores, and so you can really stop right there and just look at that and say, you know what, let me. But this is what I also realized too. You can look at those 3. You can click on the Equifax and click on the TransUnion, and you see the different scores. But if you go down below, it shows you your debt. this is where I realized that the reporting to those individual credit bureaus is not as stable or it's not as sure, because Experian may show that everything actually right. It may show that, okay, you got a mortgage, you got a car note, you got 3 credit cards, show everything. Then you go click on the Equifax, and it may show, oh yeah, you got your mortgage. It don't even show your car loan on it. It show your mortgage. It show 2 or 3 credit cards. Then it shows some debt that you've been paid off that's still on there.
Mhm.
So like the reporting can be off between each, and that's why I think it's important, like Lavelle said, that you look at those things and say, hey, I need to get this stuff and start writing these letters. But there are some be careful about these templates you use to write into these credit bureaus, because some of these are just generic templates, and as soon as they see them, they know you didn't got that offline or somewhere. That's why some people recommend like using maybe chat GPT to
Man,
upload it in there to.
dude, I'm in a relationship with ChatGPT, man. That thing there is scary, doc. I mean, dude, it's been helping my DJ business. It's been helping my
Yeah,
that thing.
I really want to learn like chat GPT, like for real.
It's literally it's like a virtual assistant. That's basically what it is. So for example, I know we're getting off the subject, but we're kind of on the subject. So what one of the guys that I follow that's a DJ, he said, okay, so tell ChatGPT that you need some assistance with what you're doing. So hey, Chat, you're not saying the name, but hey, says you are a DJ and you're getting ready to DJ an event for a 60-year-old young lady who was da 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 da. She like this, she do this, she married, da da da. You give it what you wanted to tell you, and it literally, and the more you talk to it, the more you have a conversation with it, the more information it gives you till you get where you need to get with it.
Wow. This is I don't know if y'all know, this is good information. This is
Man, it's amazing information.
This is very good information. And I did this. I started doing this research because when Lavelle put his personal testimony out there, and I knew that I was kind of going through something similar, with the way I had been trying to organize and strategize with mine. Because I'm like, I'm looking at everything now. Everything for me like is a strategy. Like I'm looking at it, I'm trying to figure it out, maneuver, everything for me at this age. And I wish my thought process was like this when I was younger. Because everything now, like I'm methodically, I'm dissecting everything I do, not just with credit, but in it, if it's business, it's whatever. I'm dissecting, I'm breaking it down to the minimalist form to see, like, how can I get the most out of it.
And
And so
I mean, anybody that I thought, as far as I go watch some of their videos on YouTube, is when they talked about credit, and I understood the algorithm and how many views and stuff they had on their videos. I was watching those individual videos, learning about the FICO score, the Vantage score, understanding, saying what to do, what not to do, and that's basically how I kind of just trained myself. I just dived in, man, with those. They say YouTube University, and I kept on in it, and man. And there we are, so I'm very protective when it comes to that area, because I love money, but credit can get you a whole lot further in some situations.
Yeah, right now I don't recommend that, because Credit Karma is never gonna give you accurate. Any credit company or credit anybody will tell you not to use credit.
The score gonna always be different. Credit Sesame, Credit Karma.
Yeah.
Even though they
speak, yeah, never.
Credit Karma has kind of stepped up, so to speak. They try to make themselves look pretty, and they dressed all up and everything. They got to do things that they do. They even got their own banking now and all this stuff. But you got to be very careful with them.
The best thing to do is go get you a free Experian, a free TransUnion, and a free Equifax.
Yep, that's it.
And if you really want to dig deep, get you the Experian account, because Experian actually shows the FICO score. If you go
and also what Experian does as well, Experian, you can actually put like your light bill, other stuff that you pay on your Experian account.
That's why I was going to go when he was talking about earlier, adding like those non those accounts that's not reporting, where you can
Right.
do what they call self-reporting, a boost with
Yeah,
Experian,
a boost.
where
That's it.
you can attach your bank account to Experian, and it
hmm
goes through there and it looks at all the bills you pay, and then it'll say, hey, do you want to add this bill, this bill, this bill to your thing? And it does. And as you pay it and you pay it every month on time, it reports that. It's called self-reporting. So
hmm
that will give you, sometimes that'll give you a 5 to a 15-point boost
Yep.
just doing that in your
hmm
credit. So get the Experian, pay for the $24.99, whatever it is, because you get a 7-day free trial when you first do it. And then after that, after the 7 day, it charges you 24. But get that, and because you can get all 3 credit FICO scores, and then you can use that to continue to monitor, or you can just keep the free one. Just keep the free one if you just don't want to see all 3 of them. But I can tell you, different organizations use different bureaus. So if you
hmm
know all 3 of them, it would behoove you. But if you just don't want to know but one of them, you know, like I said, you can get it. But I know Experian shows the FICO score, and I know TransUnion, when you're doing the free, it only shows you the Vantage score.
And if you do pay, if you have a business for yourself, and you are paying for the monitoring, the $24.99 or $19.99, that is a tax write-off. You can take that right there and put on your check.
Phyllis said, if your son has the same number as their father, keep check on it as well.
Do what?
They are supposed to go by the son, but sometimes the name slipped through the crack. My son had that issue with his dad. The same
Like,
number? They don't
you mean like
they don't have the same social security number.
no, they gonna have to. Are you saying like my son is Lavelle South the senior? I mean junior, and I'm senior. He talking in that regard, maybe.
Well, I do know they were confused because again, my name Hubert Mays, my dad's name Hubert Mays, my son name Hubert Mays, and so that's why I always tell Lil Tony, use the second. Don't just say, and don't be saying Tony Mays. Yeah, you can do it with the
Name.
same. Yeah. So, and they will confuse you because sometimes they pull there to see the name, pull the name, and then that they don't look at that the social. Because I had another company did that. They pulled mine, they used my name, but they pulled my son's. They just, I guess, pulled the first Hubert they saw, and it was my son's. And then
Mhm.
and I said, well, tell me what social security number is attached with that name. And he told me, I said, no, that's my son, that's not me. And they was like, oh, well, it pulled his profile. I was like, no, you need to go back in there and pull my profile. So you got to be careful of that too. So
Yeah.
yeah, so he has to definitely with the name, make sure that they're actually pulling the right person. And with the credit bureaus too, you know, you guys can go in and do credit locks and blocks, where you can put a block on your credit so nobody can access your credit without a PIN or a code that you give them. So it's so many ways to really protect yourself now. And my cousin benefited from the good credit his dad had to get his first car. Yeah, but his dad was pissed off, I bet you. I bet you his dad was pissed off. But you got to keep it simple, man. Keep it simple. Use Consumer Credit Monitor to keep an eye on your credit reports for accurate or inaccuracies, new accounts, and to protect you from identity theft. If you're trying to get approved for a home loan or auto loan, use myfico.com to check your scores or let a lender pull your credit. There will always be variation in your scores. That's what I'm talking about between the different bureaus. There will always be variations because you know, when you look at them and you get those reports from each one of them, you'll see that some is reporting something different, you know, and if it's old stuff, have it removed, dispute to have it removed.
Yep.
Yep. So hey, look, guys, this has been really good today. I think we're gonna run it back tomorrow because I still had some more information that I wanted to run by you guys. And so we'll and then Monday we'll resume and do a part 2 on this Monday, and we'll kind of recap and just kind of go back through this. And I hope this has really helped you guys today. And make sure you share that you guys are sharing this particular live, because there are a lot of people out there that's struggling with this. You know, you yourself may be struggling with it, or a lot of other people may be struggling with it. So make sure you share this information. We want to make sure that we can reach the masses, for people who really, don't know how to get their credit right or even understand, because you might be like me, just confused. You didn't know there was a difference between a credit score and a FICO score, and until now
Mhm.
So this information is, like I said, very important, and especially in the US is very important. And I think more people are starting to get concerned about, because like I said, now they get insurance, they checking your credit, all of these different things, man. Now, and it makes a difference on the rate that you pay.
Yep.
And that's something I never understood. Like, I guess it's kind of a reward system where you reward the people who have really good credit by giving them low rates, but the people who got bad credit, you get them a high rate. So to me, you putting them in a bad or worse situation, because you're getting them a higher rate, something that they can't afford. But I guess they saying, well, hey, get your shit together, then you won't have this rate.
Rodney just said something very key right there, and that's what I had to learn. Credit is like a hammer; it's a tool. You have to know how to use it, utilize it wisely. Absolutely.
Absolutely.
Just don't be out here just, stunning, just buying stuff to buy stuff to get stuff. Nah.
I told you at one point, man, I was financing 3 cars. I'm like, boy, you stupid. 3 cars at one time. Just crazy, man. So you could imagine, man, like they was killing me, bro. They was killing me. So anyway, now when you know better, you do better. So
yeah.
Anyway, come on, pray us out, brother. I gotta get out of here. I gotta hit this road.
Okay. This is not going to be a prayer. It's going to be a prayer, but it's going to be more of a challenge. And I'm going somewhere with this, because this is just where I am in my life right now. I need everybody that's on here to really reflect on your life and look back on your life and just be grateful. And really understand where God has you in your life as it pertains to, it could always be a whole lot worse than what it is. Always count your blessings. Like, well, this thing with this credit, it's cool, but somebody's struggling in life just to live, if you will. So, with this closing thought, a scattered prayer, if you will, count your blessings. Be grateful in everything. Be thankful for everything, because you can be here today and gone today. And for the last couple of days, I can just say for myself, man, I be walking through the house and looking around and look at my family, look where God has blessed me, and I have an overtaking type spirit of gratefulness and thankfulness of how He keeps us, from all hurt, harm, and danger, and things so easily could have been the other way. My wife have had 2 eye surgeries back to back, and then everything is fine. They could have just literally went the other way. Just little small things I think sometimes we just take for granted. So with my closing remarks, and it kind of not being a prayer, so to speak, but I want you to just really reflect on how good God has been to you, and even how you're still in your right mind, still have your health and your strength. Somebody's in the hospital struggling to breathe right now. So those are my closing remarks.
All right, so you didn't give us a prayer. All right, well, we'll see you guys Monday morning, same bad time.
No, you missed it.
Nah, I heard. I thought you were gonna still like prayer.
No.
All right, well, we'll see you guys same bad time, same bad place. 2 Minute Hats. Let's talk about it.
The 2 Minute Hats podcast with your hosts with the most, Tony and Lavelle. Every morning from 8 a.m. to 9 a.m. We also have Queen Watkins with Clock Dead. Tune in with us and have a great time. Let's talk about it right here. 2 Minute Hats podcast.